Hello, Jim Adams here. Welcome to the Easy Investing Income YouTube channel. Today I want to share with you how to get started selling put options. I want to keep it real basic and make it where people who have never sold options could actually watch this video and hopefully place their first trade. So that being said, let's go ahead and get started. I also want to mention at the very end of the video, I'm going to share an actual trade. I'm going to actually make a put trade. So stay tuned to the very end, and I think you're going to really enjoy, what I share with you. So at first, I always look for optionable quality companies. So what does that mean? It's companies that I want to own that pay dividends, have good earnings, and then also there's quite a few contracts, both calls and puts, that are sold on them. So they're quality optionable contracts. Once I identify those companies, then I usually add them into a watch list so I can track them and keep an eye on them so that the next time the market's down big, I can actually look at maybe selling a contract. Next, I look at what price I want to own that security at. So if it's a $50 stock, then I typically like to try to go 10% below the current price. So if it's a $50 stock, I may want to try to own it at 45, and that's important with the strike price that you choose when actually selling your first contract. Next, I look for a down day, and then where I can actually sell a contract. So typically you can't make as much premium on puts when it's an up day. If it's a down day, especially if it's a correction, you can find a lot of premium. So I will look for when the market's down like today. It was down this morning. I'm assuming it's still down. But if you go on at a down day, you can actually find some really good premium. And then I look for strikes that are 30 to 60 days out. And again, at the end of this, I'll show you in the demo. I'm going to go through actually doing this. And then I also look at what's called the 20 delta. It's what's called a Greek, and a 20 delta is like the probability that it's going to expire outside the money. So a 20 delta is like an 80% probability it's going to expire outside the money, and it'll just go away. I don't really need to do anything with it. Now, if you want to take less risk, you can do what's called a 10 delta, 15 delta, anywhere below that 20 delta. If you want to take more risk, you can do higher than 20 delta. For instance, if you do a 10 delta, then it's like a 90% probability it will expire outside the money. And then once you've picked that contract and you've actually sold it, then you really need to manage it. And how I manage it is usually 2 weeks, maybe even 3 weeks, I'll start looking at that contract and I'll be sure, one, is it outside the money? Is it inside the money? If it has an ex-dividend date, do I need to keep track of that ex-dividend date? A lot of assignments occur during ex-dividend dates. People want to either, you know, well, typically they want to get that dividend, so they will have it assigned, the stocks assigned to them. Or for puts, it's kind of the reverse. They may sell the contract soon after an ex-dividend date because they've just gotten the option and they don't need to keep it any longer. So managing about 2 weeks out seems to be a good time span for me, and it seems to work really well. So before we jump into the demo, and I want to keep this video short, so please add any comments if you're confused at what I'm talking about, and I can address them in the comments. But as always, please subscribe, hit that like button. I do have a Patreon that I'll have links below. I have two different memberships. I have what's called an investor club where I share all my trades. You have access to the trades. You can comment on them. I also put all my spreadsheets out there. Anything that you need, or anything you see in these videos will be available to my patrons, and that's like a $10 level. I have a $25 level that gets you a Discord as well as a weekly meeting that we have where we discuss trades, we discuss what's going on. So I encourage you to look at my Patreon memberships, and if I encourage you to give it a try. It's worked out pretty well, and again, I share all my trades, and I do it pretty, like today I shared a trade I did earlier today, and I'll share the trade that I do with this demo with my patrons. So that being said, let's go ahead and jump into the next part of this video. Thanks for joining me. Okay, I've logged into my account. I brought up my watch list. It is a down day, so I'm looking for what opportunities exist. And right off the bat, I noticed that Lumen Technologies, which is one of the companies I like, it pays a good dividend. Their revenues have been shrinking over the last 2 or 3 years, but their income has been going up. Now, they did miss income. I think they reported yesterday and they did miss it, so they're down quite a bit. You can see they're down $2 and almost 16%. Now, I think this is an overreaction. At least I believe that's the case because it looks like they reported 50 versus 53 cents. Plus, with their stock at 1076, it's almost like a 8-9% dividend return. So it's something I definitely like, and in the fact that it pays such good dividends, it's something I'm truly interested in. So it's a good quality company. It's very optionable. I've looked at options before, and we'll jump into the options. But I think that's what I want to look at today. That's what I want to potentially sell some puts on. So let's jump into Lumen. And part of the reason it seems like it's down a crazy amount is because it was only $12 to begin with. So the fact that it's down to $10, and they're actively buying shares back. So their outstanding shares are going down significantly. But let's scroll down here and you can see you can see what it's done today. It's a little crazy. But let me show you earnings. Earnings are kind of crazy too. So here you can see they've been beating. So third quarter, they beat. They reported 51 when they were expected 37.50. So really good. This month they were again expecting 53, a little bit over 53, and I believe they reported 50. So that hasn't been updated yet. Now you notice the revenues. Let's actually change this to annual, but you'll see. So profits have been going up. Now the revenues have been going down, and that's related to restructuring and some of the things that they've changed. Um, and I think cash flow's okay, maybe down a little bit. We can also come back up here and we can look at statements and compare it that way. And you can see 17, 17, 22, 21, 20. So it hit 22 billion back in 2018. Now it's around 20 billion. It was 17 not too long ago, but you can see that the profits have been increasing. It took a big loss. What was that, 2019? And so what I showed you with the earnings, it's looking pretty good. So it's something, and it's inexpensive, so it's relatively easy to sell options on. A great stock to kind of get started with. So let's jump into options. And now Schwab brings up this screen, which is, I think they default to what they think you may be going to be looking at, but I always jump right into the full options chain. And so right now I have it as call and puts, and you can see everything's up a bit today. Um, considering it was 12, 12 and a half, and again at 1050 or 10, that's a 10% reduction from, well, it started at 12, would be 11, it's 1075. But I kind of would take the price it started at today. So I mean, it's currently at a price that's pretty close to what I would want to get it with. Now I can switch over here to Greeks, and you'll notice that right underneath the P for puts is delta. So I can see here that you know there's a 10 versus 30 delta, and again with such a small price it's fairly extreme. Of course this is expiring tomorrow, so let's also change the expirations. Let's unselect all and let's start with between 30 and 60 days. So we'll select these, we'll click continue, and then so here we'll see this is the 20 closest to the 20 delta. So at 950 you can get 11 to 14 cents. At 10 you can get between 21 and 27. I think it's going to have a major bounce back. I've seen this happen before, so I would even be happy with getting it at $10, or maybe even 1050. But let's go out. Let's see if we can get even better. So here we're 28 versus 10. So, and that's $10. So it's at the start of the day, it's nearly down 20%. So this is another great option, $26. And again, you're talking $10, so $1,000 I could do 3 or 4 of these contracts. Now, if you're getting started, I would only do one, just so you can learn it and get a feel for, how it's working. So let's go down a little bit more. So this is 43 days, and at $10, it's 28. It's 0.29. Okay, here's actually closer to a 20 delta. And again, as you go farther out, you got to realize that if you're able to do a shorter expiration, you could potentially sell 2 contracts in a 60-day duration. If you do 2 at 30 days, so you've got to look at if the premium is less for a 30-day. If it's only slightly less, then it's probably better to do a 30 days. So let's go out to the next one. I think I've got 2 more here. So let's look at these two. So the 50-day at a 20 delta, it's $18 to $25. Now that's at 9.50 at $10, which, even though it's a 30 delta, in my mind it's not that risky. At $10 and it pays $1 dividend, you're talking a 10% dividend. So I'm thinking at this 50-day level, and it's a little bit, a little more risk. But to me, I can easily do one of these contracts, and I'm perfectly fine with owning it at $10. So it'd be 1,000. It would cost me $1,000, but again, I'd be earning close to a 10% dividend. So that's what I'm going to look at. That's what I think is a really good value at this point. Again, at the beginning of the day, it started I think at 12 and a half, and my guess it's going to do a bounce. It may do kind of a U, or it may do a quick bounce. I think it's probably going to be more of a quick bounce, because at this level, I guarantee you they're going to be buying back a lot of shares. So let's go ahead and let's do this level. Let's say select. And what I do, which is a little bit different than a lot of people do, I will come back and I will say puts. Yeah, I could have clicked trade up here, but I come back down and I will say trade here. Okay. And so I'm going to do a cash secured put at $10. It doesn't make sense to try to do, well, you could do a 9, but being that it's so expensive, I'm going to stick to it being a cash secured put. A lot of times, and I don't want this to get too confusing, I might turn this into a vertical credit spread, but I can also do that down the road. So again, for people who are just learning, this is a great opportunity, a great trade. So at $10, I can pick up between 30 and 43 cents, maybe 36 cents, and I'm going to actually do 3 contracts. But if this is your first time doing it, I would stick to 1 contract. So I'm going to do 3 contracts. But actually, let's change this to market order. And let's change this to sell to open. So I'm selling a contract, I'm opening it. So I'm selling the opportunity for someone to put those shares to me, and they're paying me $30 for 1 contract. So not bad, and it's for 50 days. So for 50 days, I could be earning, $30. Now, typically, and that's not bad if you're, that's a dinner, an inexpensive dinner or a real expensive lunch. But for me, I'm okay with doing 3 contracts. So let's up that to 3 contracts. So $90. That's more along the lines of what I would want to do. Just out of curiosity, we can also change this. So let's see what 414 does. Puts it to 114, and it's still at $10. So that's another option. I could push it out a little farther and take a little bit more risk. But if we go back to the previous date, which was at 325, that's 84. So it must not have been 325. Maybe it was 414, which is, I think, 50 days, unless the value changed. So let's look at doing this one. So at this point, let me go over the trade. So I'm selling 3 contracts. Now, again, you can only do 1 contract, and it would be a third of this, and it's going to expire on April 14th. I'm doing it at a strike price at $10, which is almost close to 10% below the 10.7. and I'm picking up $114, and the cash I'm putting it at risk is 3,000. So not a whole lot of cash, but I'm earning $114 on in less than 2 months, 114. So if you're able to do that every 2 months, you can multiply that by six. So you're talking close to $700 if you're able to do this every 2 months on 3,000. So I think that's close to what, a 20% return. Yeah, because 10% would be 30, 60, so almost 25% return. Not bad. And again, to me, I'm not taking much risk. If I pick this up at $10, I'm getting between pretty close to 10% dividend on this. So let's go ahead and jump in. And the reason I do a market order is I don't want to. If I did it, sell. What are the other options? I could do a limit or a stop order or a stop limit, and then I have to watch it more. I have to play with the trade. I have to, try to see if I can get it to work. So I might have to, change the trade several times during the day. And I just want to get in and out and be done. So make $114. Think of how else could you make passive income in what I think this video will probably be about 15 minutes. If you're driving Uber or doing something else, it would be a lot more, a lot more work to earn $114. I don't know, that may be 2 days of driving Uber or one day. I'm not sure. I've never driven Uber, but let's go ahead and we can review the order. Again, it's telling me 112. It's telling me the cost, and it's saying everything looks good. It's still available, and now I can do place the order. And so here I've got it placed the order. It was successful. I can look at the order status. And it went through. Let's do today's. It's showing me other orders I've done. So there it is, Lumen 414, and I did $41. So that's what, 123. So I made $120 on what, 15 or 20 minutes worth of work. So that's pretty much, how I do it, and I try to keep it as simple as possible. And I do the market order to, where I don't have to be on and off all day. So I made 120 dollars or so with probably, if I wasn't doing this video, probably 10 minutes of work. So that's how you do it. And again, is it risky? It's a little risky, but with a stock like Lumen, whose stock I want to own, it's not that risky, and it's a great way to earn passive income. So hope you enjoyed this. As always, check my website, Easy Investing Income. There'll be links down below, and I hope you have a wonderful day. Thanks for joining me.